Okay, here we go. Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. Today we've got a great guest who has a story that I think will be very interesting to you all and may even resonate with some of you out there that are looking to get into the space. And he has what I would say a very impressive trajectory into a particular niche in the market in the syndication space, mainly in apartment investing. And so I'm really excited to have Spencer Hilligoss on the show with me. Spencer, how you doing today?
Doing great, David. I really appreciate the invite and the opportunity to be here. Thanks so much for having me on.
Yeah, my pleasure. So the premise of our podcast, as our listeners know, is getting the whole journey and hearing your whole story and how you got to where you're at today. That's what everybody wants to know. They're wanting to crack the code on success. And so if you don't mind, back up. You have a pretty cool corporate background in the tech space. And so maybe tell us a little bit about that world and what your transition was like getting into the real estate space.
Yeah, happy to. And again, I really appreciate it. So I live out here in the Bay Area in Silicon Valley, specifically in Alameda. It's a really cool little island between Oakland and San Francisco. And so I was really kind of born into this area and the industry. As you know, as an adult, I got into the local business, and the local business is technology companies and software companies. So that has been 13 years of my life and my career and my passion across 5 software companies. And specifically what I was doing was building like high velocity operations groups and sales groups and just hiring a ton of people and coaching and grooming and building sales processes and operations processes. And I won't bore you guys with that, but I will say it was an incredible experience. I'm not the guy who's going to get onto a real estate focused podcast and say, screw the W-2 life. I really enjoyed it. I actually got a ton of fulfillment from it, and it taught me effectively my MBA, in the earlier years of that, because I started at a big company and then progressively went to smaller ones because I was looking for more of a scrappy building. Flash way back in time, and I actually grew up in a real estate household though. So sometimes I try to not necessarily bring that up, but I've been encouraged just to tell people outright, because they're like, dude, how come you didn't tell me that? Like, you've basically been in real estate since you were age 6. So that is true. I mean, there's literally photos of me sitting in a vacant plot of land when I was about 6 years old with my dad. And my dad was one of the top performing residential real estate brokers in the United States during the 90s. And so I watched him build that business from the ground up until he hit amazing heights. The conversation we probably don't necessarily want to go into today, but in case people have weird questions about it afterwards, is that was his first business venture after growing up as a carny. So,
wow.
Yeah, so that's probably for another time, but I had minimal exposure to the carny lifestyle, carnival folk. That's what a carny means. Everybody.
Yeah, we got to get into that at some point in time, but maybe not today.
Maybe not today. It's a deep well of stories. Quite different than what we're talking about today. So otherwise, I went through this experience of working open houses for multi-million-dollar mansions because my dad made me do it as a teenager, and so he had made me do that. I hated it. Man, did I hate it. And I ran screaming away from real estate into the technology field because of that exposure. And here we are, flash forward all the way back to about 2016. And a mentor of mine in the corporate world nudged me into a lender, to take a job as a senior leader in a lender. It's called Lending Home. It's now the single biggest fix and flip lender in the country. Do hard money loans. And I joined that place not really getting investing, not really getting that side of the real estate business. And I got to say, man, I got the bug so bad, and I didn't want to become a flipper, despite the fact so many of my colleagues were flippers. And I found multifamily, and I found this other world of passive investing. So my wife and I, she has her own career, I had my own career. We started investing, and I started building a business based around that on nights and weekends for 3.5 years. And just 4 months ago, I finally put in my resignation and walked away from that career for good. And that was a big moment for me. Didn't necessarily plan on it happening 4 months before the COVID-19 crisis black swan event that triggered a recession. But that said, we're in a good spot because of it. So everything that people talk about with multifamily and, we do a couple other asset classes too, like mobile home parks and self-storage. But, that stuff is real. And we feel really good foundationally and financially because of all that stuff.
That's great. So we got to back up a little bit. Let's talk about what you were doing at Lending Home and how you had this spark of interest in the real estate business because of what you were doing from a tech perspective and from an operational corporate perspective.
Sure.
So let's talk about that. You were there, you were doing your corporate thing, building up a big team, closing a lot of deals on the lending side of the business with Lending Home, significant volume of lending there.
Yep.
And what's going on in your mind personally as you explore the concept of real estate and getting into real estate?
Yeah, I appreciate you asking about that. So right before I went to Lending Home, I was with another tech company, just to give you some context as to where my head was at, because you're kind of asking about the spark that lit the real estate fuse. And I had just worked at one of the hottest, quote unquote, tech startups. It was like a unicorn. That means they're valued at over $1 billion. This is around 2015. And they're just growing like crazy. But I was also doing a lot of the working style that so many folks in Silicon Valley, they kind of glorify, even though it's brutal, which is you're working 16, 18 hours a day. And I look at that period of time, and that's when I really just had the wake up call. We had an infant son, we had our first son then. And I said, I can't keep doing this for the next 30 years, that like, there's no way this ends well. And so I was, doing what everyone else in Silicon Valley tends to do, which is chase early stage company equity, thinking that was going to be my get out of jail free card for all my financial sins that I had committed along the way. So it was brewing. It was brewing. And so I got into Lending Home. I didn't necessarily know how lending for real estate investing worked, but I was tasked with, leading a team of loan originators, and they were very opinionated, experienced guys. And they're basically saying, why the heck should we listen to this joker? I came in from the outside, so I had to get licensed as a loan originator. I had to build up that team. I had to build all the processes around that, all that stuff. And I saw the economics, and I saw the success on the other side of the transaction from a lending perspective. Starting off when I first got there, it was like 150 loans transactions per month that we were funding. By the time I left, we were doing about upwards of about 600 per month. And so I got to just absorb this amazing data and be in these conversations with brilliant people that have been in the business for such a long time, right? And so I saw how wealthy that a lot of these investors were doing it. And I was like, how do I get on the other side of that?
Right.
I think the biggest moment, though, honestly, David, was when there was a couple colleagues of mine who they were less experienced in the corporate world than I was, but man, they would spend hours after work in a room, like collaborating on something. And I wanted to know what they were working on because I respected these guys. And it turns out they had gone off 2 years prior and already started building their own business. And they did it on nights and weekends after absolutely crushing it professionally all day, every day. And I sat there and said, well, what's stopping me from doing that? There's absolutely nothing stopping me from doing that, despite maybe physical energy. So I got to figure that one out. And time, and so time and energy. And I just started to restructure my day, started to restructure and have very open conversations with my better half. And now my co-founder, who's my wife, Jennifer, about how we can make this happen. And so that was the fuse.
That's great. So the fuse is lit. Now, how did you take action? What were the steps that you took?
Yeah, first step was like auditing calendar, as nerdy and tactical as this might sound. We all have so much time, so much more time than we tend to realize, right? And I think that saying no is one of those things that none of us are really good at by default because we don't want social awkwardness. But man, if you prioritize right and you sit down and you say, these top 3 things are what matter to me most in my life and in my business, then it makes it a lot easier. You can go back to your calendar and just say, when all else fails, I need to get these 3 things done this week. So yeah, I started becoming, old manning it, if you will, meaning wasn't going out to dinners, wasn't going out to the bars. I already had a kid, so that kind of helped me in that journey. I kind of gave up my younger early 20s partying lifestyle quite earlier than a lot of friends. And I think that's where you get a big source of time. I put away my Xbox, which was a very sad day. All of these things are a way that you get your time. So beyond that, though, sign up for coaching programs. And I think coaching programs are hugely important if people want to take this stuff seriously. I've gone through four. I think I signed up for my fourth, more recently. And I think I will always be in at least one of those coaching programs because they work really well. It's an investment, you got to show up for it. It doesn't magically make you wake up one day and suddenly get really good at something. You got to put the work in, but you get accountability from it. You get support. And you also have someone sitting there holding your hand saying, man, I hope that you don't go scrape your knees too badly. And so I had a chance to go and work alongside some coaches, learn how to underwrite in the commercial space, learn how to go and actually review deals and just, analyze markets and all that wonderful stuff. But it's really helpful having a coach. And so I took those initial steps.
That's great. So a lot of people, when they start to think about real estate and specifically for you being in working with lending home, you were in the fix and flip world. You were funding fix and flip deals. So that's a natural place for people to start, is in the fix and flip space. What was it that caused you to say, wait a second, I'm actually going to go and start learning about commercial real estate versus, beating yourself up in the fix and flip space?
Yeah. I think maybe it was reading a little bit too much Rich Dad Poor Dad by Robert Kiyosaki, like so many of us have. I read that and it really stuck with me about the comparison of the pipeline versus the buckets. The analogy of, well, when I go to sleep at night, I want to know that I have a pipeline of income, like an income stream or multiple streams that are flowing in that my family can live off of. And I watched my dad, as you guys heard earlier, that like he went through an active business building. And I also, one thing I didn't mention, and this will be brief, is that back when I was growing up, I watched my dad's business crumble when he stopped working, because we went through a really hard period of time when, I lost my brother to cancer, my parents got divorced, all this other stuff I won't go too much further into. But bottom line would be, he was carrying the buckets, right? He was carrying those active income buckets. He's a broker, so he had to keep working. That's essentially what I saw with flipping. And I saw that flipping was going to be a strategy that just, you bring the big bucket of cash, you dump it on the table, not actually, but in figuratively, you're getting that income in a one-time moment. Multifamily and these other passive rental strategies were actually going to get me to more of a pipeline. And so it sounds elegant when I say it, like, oh, I jumped straight into multifamily, but we did go through a residential investing rental mini portfolio building experience as well. We bought locally because we weren't okay with long distance. We bought a duplex up in Vallejo, which is just north of us here by about 45 minutes, and we still own it now.
Gotcha.
We drove around for an entire summer just trying to find that one duplex. And in hindsight, I don't think I would have done that again, but like we spent way too much money for $250 a month in cash flow.
So you bought this duplex. So I think this is an important, and let's just touch on this real quick. That you did have a foray into small multifamily. So yep. you bought this fourplex in California. And briefly, just tell us about that, because there's a lot of people that are looking for small multi right now, right?
Totally.
That are listening to this podcast saying, hey, I want to get into the real estate investing world. I know multifamily is a great place to go. I either don't have the education or the understanding or the confidence to go into something bigger or the capital. So let's start out a little bit smaller. What was your experience like briefly when you started there?
Yeah, I think this was a good learning. It was a good learning for both Jennifer and I. And just to remind folks about the context, like we had been working for 13 years in the corporate environment. So we had some financial footing, right? So if folks are sitting out there wondering about what to start next and they're deciding like what strategy and what asset class to go for, we had some capital, we'd done okay. So we went locally because we were scared of going and buying something sight unseen. And so we went out and bought because we could see the property. We actually could, if we needed to, drive by it, in the future. And so we ended up buying like a $430,000 duplex. And it was, that's a lot of money. It obviously has a loan on it, so we didn't spend that cash, but we still put down like $100,000+. So that's a ton of money to drop on something that cash flows $250 a month. It has appreciated, it is going up. But if you think about, we went on from that, took those learnings, and then we said, you know what, we've got to go find better economics. We live in one of the most expensive states and markets in the country. So we went and looked at turnkey single family homes instead, rentals. And we found a really great turnkey company. We bought 5 single family homes over the course of months out in Kansas City, Missouri, and we still have them now. they're cash flowing about $250 a month, and they cost like 50 to 60 grand each. So you compare those numbers and you're just like, oh my gosh, like I cannot believe how much further my dollar gets when I get the heck out of this really pricey California market. But the reason why we didn't stick with that strategy primarily was because we still now have to deal with an eviction, as an example. We still have to occasionally pick up the phone call and deal with a headache, from a property manager. Yeah, and we have property managers on all of our properties on the residential side. But I got to say, man, we have 2 young kids. We have a thriving business. My wife is an executive at a different company. Like, we got very little time. So we didn't want to deal with that extra time constraint. And they are cash flowing. We're happy with that. But we went through all those logical steps, just stumbling our way through it before we eventually got to multifamily. But you hear so many folks get on podcasts and say, yeah, I myself have also said, go straight to multifamily, big multifamily. But it's not the only path. I don't know if we could have ourselves gone straight to multifamily unless we had gone through those smaller properties first. I think that's an important call out for folks, because maybe you don't have the capital that we did because we had a 13-year track record before we got there. Maybe you do want to go do a single family thing first. And I think that's absolutely fine. I think whatever gets you on base, which is a funny analogy because I'm like the least sports guy ever. But,
well, this is great. I think your story will speak to a lot of our listeners that are either in the investing world or on the path or want to get started. And it's pretty cool to see how far you've come in such a very short period of time. So I just want to clarify a couple of different things, and then I want to talk about what your business looks like today and what you're focused on. But my understanding is that the duplex and the 5 turnkeys were all acquired while you were still working full time. Is that correct?
That is correct. Yeah.
Okay. So here you are, you understand real estate is a great path. You've read Kiyosaki's books. You're working for a lending company. You're seeing the income that's being made. You start to dip your toe. Well, I don't know that I would call a $100,000 investment on a $400,000 duplex just dipping your toe. You went pretty headlong into it. And then picked up a handful of other turnkey properties in another state. So you experience that, and now this is when you made your transition into commercial multifamily. What is it about commercial multifamily that triggered for you that said, all right, this is the place that I know I want to be? And let's talk about how you built your business from there.
Yeah, probably one of the most critical takeaways I got from my corporate career, David, was as an operations and compliance nerd, is that I like predictability. And I think predictability allows you to do things like forecast, like the number of hundreds and hundreds of forecasts I've had to put together over the years for things like hiring plans or revenue forecasts for growing a business, all that stuff. I like to know that I can do my absolute best to try and predict the future in the numbers. And it was really tough to do that once I saw that we had a vacancy in one of our turnkey properties. And I was like, wait a sec. So one tenant leaves out of one of these single family homes and our occupancy drops to 0. So that ain't going to work. I looked at multifamily and I thought, well, there's a 400 unit apartment building. One person leaves. There's still 399 other tenants paying the rent. And so that type of predictability made me feel really attracted to it right off the bat. It just made sense to me. And then I looked deeper down the rabbit hole and I saw like all the tax benefit stuff. And I saw the fact that there is an element of, and I'll say this as respectfully I can to my residential brethren, because I still can claim that I worked amongst the residential real estate folks, is that there is a degree of sophistication within the commercial side when it came to the underwriting, the processes that really resonated with me a little bit more from the corporate world. So I find that super appealing. And we started to invest in those as LPs or limited partners, and so we started off when we were not accredited. We don't have to go into that unless you'd like to, David, but I'd say we weren't quite to the point where we could say we weren't eligible to invest in a lot of the multifamily syndication deals that were out there passively. And at first I wanted to go and become the next lead sponsor or the next lead operator, the guy who's running these big projects, like not only pulling together capital and doing due diligence and operations, but like managing the asset, it's in its entirety. I wanted to be that guy. And then I realized when I had a mentor tell me this verbatim, he said, Spence, you got to take stock of your geography. You live in what's called a money state. You don't live in a deal state.
Mm-hmm.
And I was like, well, that sounds like a gross oversimplification, and you're kind of stomping on my dreams, man. But,
But
but
it makes a
okay.
lot of sense.
But it makes a lot of sense. And I really, really reflected on that. And so we came up with a different strategy. And the strategy was going to be, okay, I enjoy my W-2 career, not going to quit quickly. Let's start doing investments as passive investors, build up our passive income from those. And eventually, all of our friends and network, just colleagues and acquaintances in the tech world started asking, what do you guys do? Like, what are these things you're putting your money into? And we're like, well, these are multifamily and syndications. And they said, well, can you tell us more about it? And then suddenly we found out, like, wait a sec, they care about how we vet the deal, because we have like a framework we use for that. And I built it very similarly to the way I built models from the tech world. And then they said, well, can you just show us the deal and show us why you went and invested in it? And then I realized, wait a sec, I think we got a business here. So
Yeah.
that was like the genesis of kind of Madison Investing, which is our company.
That's cool. And that's a great realization. And I think I just want to put a bow on the mentor, clarifying that for you in your own mind. I mean, in hindsight, it probably seems obvious to you now,
Yeah.
but to have that mentor sort of redirect your thinking and say, hey, look, you're set up perfectly. You come from a tech background where there's money flowing in, a lot of great, very smart, impressive people that are making great W-2 income in the tech space, and they need a place to put it. And you are already starting to go down that path, understand the process, put together your own system for vetting out syndication, large apartment syndication deals in other parts of the country, quality markets outside of California,
Yeah.
generally, I would assume. And now you're the pathway for these people that you have built relationships with over time to get into these deals. Yeah, it's incredible. That's great. So let's talk about what your business looks like today. And I want to mention, like this, you're no slouch in this space. In your time, you've co-sponsored more than 4,000 units, totaling more than $500 million of investment.
Yep.
As both a limited partner and an active general partner on these syndications with both you and your wife. So, all right, let's now transition. Let's talk about how you've done this and what does your business model look like, and how have you built it?
Yeah. Coaching, once again, coaching makes all the difference. I would say that we would have taken much longer had we not coupled up with a person that was willing to like take us under their wing and work alongside them and co-pilot on some deals. And that was how it very, very first started. Now, a lot of folks, they try to jump straight into active. We really did start with passive. So we started just like seeing what it felt like to put money into some of these deals and like watching how we were communicated with from the sponsors that we were investing with. But eventually we said, what would we want if we were the people helping educate others, helping bring others into a deal? And it started very organically when I did a lot of partnership work and business development work in my tech career. So I realized I know the people side of this pretty well. So we went out and used that same framework for looking at the operator, the market, and the deal. And we started to like socialize with partners that we respect and people we were already investing with. And so we struck up the conversation with these folks and said, what are the ways we can add value to them and to their deal? And I do really well with process, do really well. We do help with like equity capital raising and investor relations. I put together in my corporate career, put together tons of sales operations stuff and CRM stuff. So all of that is complementary to folks that are heavy on real estate, and we're heavy on tech and process and operations and investor relations. So we can complement their team. And turns out the vast majority of people that do work full-time, that are accredited or financially in a good place, they don't necessarily they might think they want to get active in real estate. Once they realize how much work it is,
Once they buy the $400,000 duplex and manage it themselves.
That's exactly right.
Right.
And they're like, oh wait, this is actually quite a bit of work, and there's real headaches involved. So we went off and we started structuring a few of these partnerships. Now, the key difference I would say from a lot of folks out there is we say no to a lot of deals. And you know, we're in a fortunate position that we don't have to necessarily do deals to pay for our life. And that has been a very important part of what has led to our success, I believe, and this is according to our investors, not according to myself, is they've said, you know what, like, Spence, I really appreciate that you guys, you know, you say no a lot, but the ones you say yes to, you're also putting your own money into. And,
Mm-hmm.
and so we look at these deals anyways, because we're building our own wealth plan. And we just happen to now be sharing it with this club, this Madison Investing Club, that people can apply to and join. And so that's been the business model. And we're in the GP and we're in the LP sides of these transactions.
So just to clarify, Madison Investing is your company,
Yep.
and your business model, to maybe just sort of simplify it for those that are either just new to our podcast and just starting to understand a little bit more about the syndication space, is you partner, or let's say you curate quality operators,
Yes.
deals, and markets in other parts of the country, not
Yeah.
necessarily in California. And your role is to vet out those operators, deals, and markets to identify great investments that meet your criteria, and really do the heavy lifting for passive investors. And the passive investors join your Madison Investing Club. They subscribe to your notifications or information, and then you will let them know about opportunities that exist in other parts of the country.
Yep. Extraordinarily better said than I did. And I think it's timely now more than ever, you know, given the context of where we're at with the economy, I think, because you're noticing too that out of the California, you know, and the very hard hit New York markets and these places that are dealing with real challenge, there's a demand in I would say the South and the Southeast and a lot of these places that have great places to live, and like great places to live, like apartment buildings for people that actually want to go live in some nice secondary markets. And so those are the markets that a lot of investors out there want to say that they have properties in. They want to say, I have a portfolio I've invested in out in places like North Carolina, you know, and maybe out in Florida. So those are the types of things that we connect for folks, because they don't have, like, if we have a bunch of we have some interesting groups of investor types within our club. You know, the primary is technology professionals that have been in the game now for 12 to 15 years. Most of them have families, a couple kids, all that stuff. We've also got a lot of physicians, like medical professionals, and even servicemen and women in the military. For some reason, we have a bunch of Marines. So all of these folks that join the club, they're time constrained. And they're time constrained, but they're not necessarily capital constrained. So for folks that are like out there and they're sitting there going like, I want to get into real estate investing, I'm not sure which strategy makes sense for me. I am not the guy who's going to sit there and say, everyone should do syndication passive investing, because it's just not, it's not true. I think there's got to be the right fit. The way I would explain this in my technology career, and it still very much applies to real estate as well, David, is that there's three, the corporate buzzword way of saying this is LIMFACTs, but limiting factors. There's three like limiting factors that apply to all of us. You know, you have expertise, you have time, and you have capital. Each person is at a different starting point with those three LIMFACTs. And if you are time constrained, like the three profiles that we have a lot of within our group, like you're going to want to find something that is more actually passive. And, rentals, like the ones we bought at first, they're actually, not totally passive. Whenever people say rentals are passive, I say that's actually BS, because it's semi-passive. Like even if you have a property manager, you're going to still be doing some stuff more than you think. But in terms of syndications, if people are capital constrained, it's probably not a great fit, because your dollar will not get you as far as you want. It'll be fully passive, but you're still going to have a lot of time on your hands, perhaps. Maybe there's another strategy that might be more active, that might be a better fit. So it just depends. It depends on where you're at.
Yeah, that's great. Thanks for breaking it down. And I love that. The expertise, time, and capital, and really getting clear on where you're at. And that will dictate what the ideal investing approach would be for you. That's great. Okay, cool. So I was mentioning before the show that we have, a few different buckets of listeners on this podcast, and I want maybe to dive in a little bit more on the technical side and talk about actually the nuts and bolts of building a business that you've built, and specifically on the investor relations side of things,
Yeah.
and how you've structured that, how you really handle your investors or take care of your investors in your business. So maybe if you can, let's get a little bit more technical on that aspect of it. In
Good.
place of our deal dig segment, usually we would do a deal dig right now, but let's do a business dig
Yeah.
and dive into that a little bit deeper.
Yeah, happy to. So this is fun to nerd out on. So I was fired up when we decided we want to go into this. So one of the things that Jennifer and I, my wife and co-founder, we went really slow and deep on at first in our business building was we wanted to figure out who the heck are we trying to target? Like, who are we trying to connect with? And I noticed a lot of entrepreneurs, I'd say the vast majority, unfortunately, they breeze by this step and they think they got it down. And we went so slowly on this. We went and built, well, first, let me slow down further. We got our first wave of investors from, first layer of connections on LinkedIn, if you want to call it that, right? The people we know, friends, family, the mentors, people in my network. And that's where you should start if you're trying to build an investor network, because you already know them. You got trust, and it's all about, know, like, and trust. Those are the three things that you want people to feel about you, to know you, to like you, to trust you. So you got that. We then looked at those profiles, and then we decided we don't know enough yet. So we got to go learn some more. So what we did was literally created a investor questionnaire, like an interview template. And I went out to a healthy list of like one to 200 of my first degree connections that I knew personally from LinkedIn. These are not people that do that really cold, shady, hey, buy my product, I've never met you before thing on LinkedIn. This is people that I only added because I've known them in the real world.
Mm-hmm.
I interviewed like probably 50 or 60 people. And these were not deal in hand, let me go sell you something. These were legitimate, sure. Let me go interview you. And I want to understand things like, what's your relationship with money? Like, how do you look at and manage your portfolio? So we went through that whole thing, recorded all of them with the permission of the person I was interviewing. Sure, we got some investors out of that. That wasn't the point. The point was to inform, who are we going to target, and what's the customer persona we're going to build out? So if that term is new to you guys, what that really means is you're trying to build a fictional human being. And it basically is defining with all of the details and the characteristics of who you're trying to target with your messaging and with your content, and all of the stuff on your website and anything on social media. So we built that, and we now have 2 fictional human beings and their families with a little story written around them. And all of that was created by the insights we got from looking at our first waves of investors, and then also going deep on those interviews with people that in my own network. And so we did all that.
I want to dive in here real quick. So I love this. And I think the question that a lot of people will be asking themselves is, there's generally a sense of fear around going too narrow, right? There's sort of this comfort in just being broad and taking what comes to you that's naturally. Was there any concern about that when you really started to hone in on these 2, avatars or personas, or, whatever you want to call them? Was there any fear in going too narrow?
Gosh, that is such a good question, man. Totally justified fear. The way I'm probably going to answer this in a way that might come as a curveball, but from my sales leadership career in software, I was exposed to a book, and I think it might be like 12 to 15 years old now, but it's still super relevant, which is Predictable Revenue. Predictable Revenue. It introduces a few things about building a high growth business, and specifically, how do you build high growth revenue engines and sales groups and marketing engines and all this stuff. This is super silly and simple sounding when I say it out loud, but it has this construct of talking about nets, seeds, and spears. And I'll just even use two of those. Think about a spear and think about the net. When we did all those interviews and we got the insights about the customer personas for who we're going to target, we wanted to go and just make sure we knew who to target. So our messaging resonated on an emotional level, because that's what you're going for. You're trying to get an emotionally resonating and relevant message to people. So that's who we target with the spear, right? But the net is a silly metaphor for defining that you're still able to go and catch and create a great experience for whoever happens to still see that. Just because we're targeting technology professionals that are between the ages of 35 to 40 or a little bit older, and they have a couple kids, maybe they come from an immigrant family, all these different things. We had a Marine read some of our content a few months ago, and it really resonated with them because it was authentic, because it was real content and it was thoughtful content. So the net, quote unquote, of our website, our content, the real conversations I try to kick off on LinkedIn on a daily basis, and I don't hire someone to do that. I do that myself. All that stuff is kind of like the spear, but you're getting out the messaging, and then whoever comes back to you in the net is because we've actually constructed it in a way that can catch or attract people and bring them into our marketing funnel. So
that's a great explanation. And man, I'd love to keep you on here for another half hour to an hour and just keep diving into this. But let's maybe take it one step further, and then we'll wind down with our final three questions. So you've built out these personas, and you build out a process for connecting with these people. Maybe talk to us about what that process looks like, and how important the communication with your investors is.
Sure. Yeah. So there's a lot of firms out there right now that if you go to their website and you want to sign up on their list, most have some way of signing up for a list. You ask for an email address, at least, and a full name, maybe a first name, and they might just add you on. We take a more boutique, I would say, approach, meaning the top, you're going to hear me use the term top of the funnel. That just means marketing funnel. If you want to sound really cool, you can say tofu, mofu, bofu, top of the funnel, middle of the funnel, bottom of the funnel, but then you're getting really nerdy. But at the top of the funnel, we wanted to make it very narrow. And that just meant, when folks come in, we're okay if people come to our website and they realize and they self-select out that they're not a good fit. But I will take more time. I will take 30, 60, maybe 2 60-minute conversations, just getting to know a brand new investor, because that time with the right person is legitimately adding value to them. And even if they don't necessarily come in and invest with us, that's fine. We just want them to feel like value was so meaningful to them that they're going to become a promoter of the business. And we've literally gotten referrals from non-investors that joined our club. They still haven't invested, but they've brought in 2 to 3 others. And so, those other ones have invested. So it's really about putting some work in, like putting in the hustle and getting on the phone and not just expecting emails to do all the work for you. Like you have to find a way to listen to these people and build a meaningful connection as a human. Assume you've done that, all that really hard work, and then you've got them in your list. Now it's just about having a foundation of a real human relationship, not just your email MailChimps once a month, but we do that. We do a monthly newsletter. We also send really tailored personal communications. Like I'm on a text relationship with a bunch of our investors, and they just send me little gifts. And sometimes some investors want that. Some investors want nothing to do with me until the time of an investment, and that's absolutely fine too. So we don't need to be best friends, but I want to be available if they want that track. And frankly, I am really good friends with a bunch of our investors now on a personal level. So you got to be available and do the business basics to make sure they're armed with the right investing knowledge at a minimum.
That's great, man. We could keep going down this whole process of the business that you've built out. That's really incredible. The amount of traction that you and your wife have built up over the last few years is really impressive. And I can see why you're willing to spend the time and give back and provide value to people. I want to start winding down here, even though we could continue to go deeper and deeper and deeper. But I've got 3 final questions for you before we sign off. Okay.
Cool. Hit me.
All right. What's the biggest challenge you've faced on your investing career so far?
Patience, Patience by far. I think sitting there knowing that there are deals getting done and we have chosen to pass on investing our capital in a given deal, or maybe 6 different deals, or maybe even 10 different deals. And usually it's much higher than that because you see them going through and you know you have some capital to deploy and it's burning a hole in your pocket, but you have to have the discipline and the wherewithal to not do anything about it. And that might even feel like at times, the self-doubt creeps in and you're like, wait a second, am I really doing this business? I'm sitting there and not doing transactions and I'm just doing content. I'm just networking. I'm just doing educational stuff. I'm just coaching people. Patience is huge. And now more than ever, I think a lot of people are realizing how challenging this discipline and patience is because the deal flow is pretty light right now in the market, but it's such a critical challenge to overcome and wrestle with, and it never gets easier.
Man, that's a good one. I don't think I've heard that one of all the interviews that we've done, and that's great. Having the discipline to be patient with the process and
Hard.
saying no. That's
Saying
tough.
no.
Okay, cool. What's the biggest win you've had on your investing journey so far?
Yeah, I mean, I really got to say, this might sound counterintuitive. We just heading into COVID-19 timing, we actually had 2 active deals, and they were very large projects, multifamily projects. I had worked 6 months on each of them in parallel. I'd spent probably 100 hours per deal. One of those deals had to die because of the market change, right? And because of lending standards. And after we announced that one of those deals was going to go away, and we had millions of dollars in committed capital that we had worked hard to bring together, including our own, we got investor messages back, and the investor messages were so overwhelmingly positive. They said things like, I can't believe how well you guys showed up for this. And I know that was a really hard thing for you guys to do, to say no and to cancel the deal. But like, we are thrilled to work with you in the future and look forward to future opportunities. So I think, the financial sides of real estate and stuff is fulfilling, but like not nearly as much as knowing that like you're sitting there adding value and building meaningful connections with people, so much so that they're willing to go out of their way to send like a very personal communication like that. So
that's pretty cool.
Yeah, might be corny for some, but for me that's very touching.
That's great. Well, and for someone that those investor relationships are, the lifeblood of your business, having that type of message is pretty powerful. That's cool. And then last question I got for you, and this is pretty broad, but what's the best advice you have for someone who's just starting their investing journey?
Yeah, goals is something that people always talk about, and I got to say, there's a reason for it. Talking about goals, like sit down as best you can and muster up the focus, turn off, put your phone on do not disturb for as long as you need to, find a way to put away all the social media, and just literally sit there and think about like, what do you want your life to look like in a certain period of time? Like down to like how many hours per day do you want to be doing X activity or Y exercise? And that matters because you're going to need that visual, and you're going to need that tangible type of daily set of activities to really guide where do you want to go and invest your learning? Like, where do you want to go and invest your time to get there? Because so many people, it's amazing how often this happens, but they go out and they say, man, I would love to be a passive investor and get financial freedom. And I say, cool. What kind of real estate strategy are you going to use? And they're like, I want to be a flipper. And I'm like, okay, you do realize that's like arguably the most active of all real estate investing strategies. Like, you're going to be hustling hard nonstop all the time, and you're only going to get income after you finally finish and sell a project. And so you got to just really wrestle with that and sit in the silence and reflection and think about what is the end goal you're going to go for. Because if you decide wrong, you're going to lose a lot of time, and you're even going to lose a lot of your patience and sanity. So think about that. Just sit down and think about it. Talk to smart people, like David, and like hire a coach, find someone who's going to be willing to soundboard and call you on your BS if you're not being honest with yourself, because it's not worth going down the wrong path. It'll save you tons of time to really reflect on that stuff first.
Man, great advice. I appreciate it. Well, look, Spencer, you spent a lot of time with us today, and you've gone deep into your business and into your journey, and it's impressive. And you're the type of person that people will want to trust and will trust and invest with. And it's just an honor to have you on the show and to share your story with our listeners. What's the best way for people to get in contact with you if they want to learn more about Madison investing, they want to learn more about you, or just connect in general?
Yeah, primary way is to check us out at our website. So madisoninvesting.com. If you want to just apply for the investing club, you just go there, click the big button in the top right. There's a little compliance form on there. The second way is I'm very active on LinkedIn. If you find me on Instagram, I'm not as active, so it's a lot more boring there, but LinkedIn is where I'm at, and I'm happy to connect on there. Feel free to throw a connection invite on there.
Great. Well, Spencer, thanks for your time. I really appreciate it, and I look forward to connecting with you again soon.
Yeah, honored to be on here, David. Thank you so much for the time and the invite.